Good morning, hello and welcome to Money Control's live stream. You're watching Opening Bell with me, Lovisha Darad. Well, after yesterday's sell-off, it looks like Nifty is well poised to end another week negatively. The GIFT Nifty is pointing out a quiet start. Even if we look at the pre-open rates, that is also looking a bit quiet, flat in the green. But we've had a strong global handover. This came amid US Federal Reserve's interest rate reduction by 25 basis points, which was widely in line with the street estimates. Now, the key takeaway from the US FOMC press conference was Jerome Powell's speech, where he said that he feels good about the economy and does not rule in, nor does he rule out a December rate cut. So, the possibility of a rate cut is on the table, which is indeed positive for India. If you look at the Asian markets, they also started the day on a positive note. So we'll see, how it pans out for the Indian markets as well. But plenty lined up in the show. We have a technical and fundamental guest for the show that will take you through on what your trading strategy should be in this volatile market. Also, don't forget to post your stock-related queries on our live feed, and we will try to address them before 9:30 a.m. Moving on, let's take a quick look at the top headlines this hour. The Wall Street rally continues. The Nasdaq and S&P 500 close at record high levels after Federal Reserve cut interest rates by 25 basis points. Fed Chief Jerome Powell says that he's feeling good about the economy, but also says that the current fiscal path is unsustainable. Stocks in the Asia Pacific trade largely higher following the Fed's 25 basis points rate cut. Investors will also be watching out announcements of stimulus measures from China's National People Congress. Meanwhile, the GIFT Nifty is hinting at a flat start for the Indian markets. Gold prices rise as Fed cuts rate by 25 basis points. Crude prices, meanwhile, remain range-bound with Brent around $75 per barrel. In earnings today, net interest margins and deposit growth outcome will be under pressure for the State Bank of India. Tata Motors is also set to report a subdued second quarter numbers. All right, now yesterday's session, that was a disappointing one as it wiped out all of the gains that were made post-Trump's win in the US elections. We saw both the Sensex and Nifty decline over 1% each. It drove all the sectors in the red as well. Now today, the major takeaway is the US Fed's rate action. That is in the limelight because the US Fed cut rates by 25 basis points to 4.5 to 4.7%. Given that Powell did not rule out or rule in the possibility of a rate cut in December, his comments, they were fairly dovish, and that would augur well for the Indian markets. So now coming on to the much asked question of the street, now whether or not he would have to step down from his position if President-elect Donald Trump asked him to do so. Powell remained defiant and said that he was not legally permitted to do so. But coming back home, we also have the ongoing earnings season that will sway the stock-specific action. Today we have SBI and Tata Motors, which is expected to roll out their Q2 numbers. On the other hand, stocks like Trent, M&M, Lupin, at NHPC, they would react to its Q2 results. If we shift focus to the secondary markets, from two primary markets, we have the IPOs, which got a final push yesterday. Swiggy IPO, which started off day one on a muted note, saw some pickup in pace on the day two and was subscribed by 35%. Employees and retail investors, they led the subscription for Swiggy IPO. The second IPO was Acme Solar. That grabbed higher subscription figures than Swiggy. It was subscribed by 70% on day two, which was primarily led by the retail investors. Other than that, we saw Niva Bupa Health, day one, subscribed by 65%, which was primarily led by the qualified institutional buyers. Moving on, let's take a look at some of the key figures that would set the tone of today's trade. First up on your screen is the option queues data. Well, the Nifty put call ratio that fell to 0.9 levels from 0.97 levels in the previous session. So some of the bearish positions that have prevailed in the option queues. Second, we have the F&O ban list. Some new additions were made. Aditya Birla Fashion and Granules India were some of the new additions. And finally, coming to the fund flows data. Once again, the FIIs continue to be net sellers in the previous trading session. They sold about 4,800 crore rupees in the cash markets. DIIs meanwhile bought stocks worth 1,700 crore rupees in the cash markets. Now, just a couple of minutes before we hit the opening bell, we can see that the pre-open rates point to a flat to green start for the Indian markets and the Indian benchmarks. But before that, let's quickly get on board with our technical expert of the show, Raja Venkatraman of NeoTrader. Raja, good morning. So good to have you on the show.
Good morning, Lovisha. Thank you for inviting me to the show.
Raja,
The way, yeah,
please continue.
yeah. Before the market starts, so the cues that are emerging right now, as far as the indices are concerned, they are pretty flat, and the kind of sentiment which one is expecting to achieve, and the kind of bias which one is expecting is not emerging. So the bullish bias definitely has gone into the backseat. And if you were to progress into the markets today, you will have to definitely trade on both sides of the market. And that is something which people have not been used to. And yeah, especially those who are investors are only looking for their investments to accelerate. But the acceleration is shelved right now. The main focus is on sustaining. And now for the markets to sustain at these levels, the levels of 24,000 to be held on a consistent basis is important. And over the last 1 week or 7 trading sessions, you can see that 24,000 levels is struggling to hold on. And the key trigger here will once again be Bank Nifty, because I feel that Bank Nifty, despite of its non-performance, has managed to put on a better show. And now SBI has its results today. And in Bank Nifty, I will have a support level of around 51,000 and a resistance zone closer to the region of around 53,000. So this should be the range which I am expecting the Bank Nifty to oscillate in. Because if 53,000 breaks, then we can expect a target towards 55,000. But at the moment, now let's look at the downside also, because the markets over the last few trading sessions have been hinting more to the downside, especially because of the poor Q2 numbers. We are not getting the confidence of the growth. Maybe it's the rate cut, maybe it's not inducing the positivity. The Trump winning, everyone feels that it's going to ignite some positivity, but then eventually the prices are the final arbiter. So now when I look at the prices and when I see the kind of sentiment being displayed, the bent is definitely towards the bearish camp than the bullish camp. So 51,000 breaks on the downside, we can expect a level of around 47,000 in Bank Nifty, and in Nifty closer towards the region of around 23,500. So these are the levels on the downside which I'm expecting. On the upside, 24,500 in Nifty. So these are the levels that I'm tracking on the upside and the downside in both the indices. Let's see how the market rolls out.
Okay. Raja, as you mentioned that 24,000, that was the level that Nifty has been struggling to maintain as well. So 24,500 resistance level, as you pointed out, how long will it take for the Nifty to achieve those levels? What do you expect?
Yeah, it should take at least 1 week to 10 days to achieve this level, though it doesn't seem very far. The kind of trajectory which we are seeing right now and the kind of lethargy which market is displaying, I don't think that it's going to be achieved in a hurry, because every time the market is showing some attempt to rise, there is some continuous sell-off that is emerging. So I would not be in a hurry to buy, but definitely I would take my chance at a sell if I'm a trader. But then if I am an investor, then I would advise to be very cautious, very selective, because the result seasons are definitely mixed, and the bent is towards the very poor numbers. And if you see the trajectory over the last 1 year, the revenue and the profitability has considerably declined. So the overall situation is not as healthy as one would expect. So there is a bit of pessimism here after a very long time.
Okay. But Raja, in this volatile market, how do you expect the traders should play out? They should hold on, they should buy on the dips, or they should sell on every rise on every strategy? What do you expect?
Yeah, so the ratios should be of the trades which you take should be more towards the sell side, at least for the next 1 week to 10 days, is my anticipation.
Okay. Raja, as you were pointing out that Bank Nifty's performance is going to be key for Nifty's outperformance as well. We have the SBI numbers rolling out, and Money Control estimates that it could be a healthy quarter for the SBI. What are the levels that we need to watch out for SBI? Because past 1 month it has given a good performance. Can we expect bullish momentum to prevail in the near term as well?
Yeah, so SBI after if you see from August, it has been particularly spent some time in consolidation because the fall in SBI was quite severe, and it spent considerable time in consolidation, and the consolidation has now moved to the upside. So this could be a trigger or some clue that some positive vibes are coming in. So SBI is a good bet on the PSU bank side. So PSU banks are performing better than the private banks. So after a long time, and even Bank of Baroda is quite good. So I would place my bet if in the banking space on the PSU banks and SBI levels. We can target levels of around 920 if the momentum persists on the upside, and on the downside, unless and until levels of around 830 breaks, where there is also a lot of OI concentration. So if 830 level is not broken, so that could be like a good support. So you can actually treat it like a multi-day play in this month.
Okay, 920 levels that we need to watch out for SBI's upside. But Raja, Nifty Metal Index, that was the top loser yesterday. We could see some additional stimulus measures from the China as well. So what is your outlook for the metal counters?
See, metal is very erratic, and the metal counters are definitely under pressure. And you will see that out of five trading sessions, they only perform on two because largely they are subject to a lot of commodity-based triggers. So I would be a very cautious player in metals, and metals seem to be under some pressure. So considering the tone of the market and the tone of the sector also, I would be a seller in the metal space.
Okay, seller in the metal space. But any picks from the metal space that you actually like?
If I like, if I have to go for a long side, then the National Aluminium or NALCO is doing quite well. So that will be a stock which we can consider on the long side. That's the only
Okay,
stock which I'll consider on the long side. Yeah.
Acha, okay, so only Nalco. Let's take some stocks in focus. Well, first up is Tata Motors. The company is expected to come out with its September quarter results later today. According to Money Control poll, the revenue is expected to be flat year on year, while the net profit may jump 32% Y on Y. We'll be taking that in just a couple of seconds. But yes, on your screen, 7 seconds, less than 5 seconds to go for the opening bell. We are expected to have a quiet start in today's market, but yes, Nifty 50 flat in the green. We can see 24 above that 24,200 mark. Yesterday it slipped below, tad just 1 point below the 24,200 mark. Today it has opened above the 24,200 mark. If you look at Sensex is down about 52 points, flat in the red. 79,489 below that 80,000 levels as well. If you look at, the stocks are just getting updated how it is going to pan out about. 24,200 for the Nifty 50 index. Apart from that, we can see that the 7 shares have advanced while 1 share has declined, while 3,000 shares have remained unchanged as well. So just a couple of minutes before we actually see, how it is actually panning out. But let's take a stock in focus. Let's see how a couple of stocks have been doing in today's trading session. We can see in the Sensex, we can see Tata Steel, IndusInd Bank, M&M as the top Sensex gainers. Among the losing side, we can see Sun Pharma, Asian Paints, Maruti Suzuki. Tata Steel once again extending its gain from yesterday's trade. It of course closed in the red in yesterday's trading session, but again today it's seeing a pop-up of about 1%. While IndusInd Bank and M&M after it came out with its Q2 numbers yesterday, today we can see a bit of a up move. It is up about 1% in today's trading session. Other than that, we can see Sun Pharma, Asian Paints, Maruti Suzuki, ICICI Bank, all of them not doing well in today's trade. If you look at some of the sectors, Nifty IT index holding strong, up about 0.5% in today's trading session. Apart from that, Nifty Pharma also doing well, up about 0.1%. Now, other than that, Nifty Auto Index, Nifty FMCG, Nifty PSU Bank, Bank Nifty Index, all of them lagging behind, seeing cuts and trading flat in the red as well. If you look at some broader markets, Mid cap and small cap indices down about 0.5% in today's trading session. India Wix, that has spiked up. It is up 2% in today's trading session, near that 15 odd levels. So yes, as we were discussing about Tata Motors, it is expected to come out with its Q2 numbers. Raja, Tata Motors, how does it look like on the charts? Because past 3 months, the stock has been languishing. There has been brokerage downgrades as well because of JLR arm. It showed some weak sales figures as well.
Yeah, Tata Motors continues to be under pressure, and the prices don't indicate any sort of recovery at the moment. Yes, we are getting into oversold territory, so you may witness some rebound from lower levels, but overall the chart seems to be stressed right now. So this not be a good time to buy, because every time when I'm on the show, there are queries asking whether what is a good point to buy. And I've always been saying that this is not a good time to buy into Tata Motors. And I continue to maintain that stance. And right now, Tata Motors is not a buy. The results may come out, and we may see a reaction to the downside. That's what the prices are telling me right now.
Okay, all right. We have a query also from Satyam. He's asking about should I buy Tata Motors. So I hope that answered your query as well. But we have another stock in focus, that is your NHPC. The stock is down about 4%. The company came out with its Q2 figures in yesterday's trading session, and it has shown that the company's net profit that declined by 41% year on year, while revenue rose modestly by 4% year on year. Raja, NHPC, the stock hasn't done well. Today also it is down. Past 3 months also it is not doing well. So what is the near-term hold for NHPC stock?
See, stocks like NHPC will require a lot of mental acceptance that the stock will move quite slowly. And the kind of trajectory which you are seeing right now in the stock will definitely be a slow starter. So at the moment, the stock is stressed. It is hinting some downside. Now, it has definitely reached some important levels of at around 80. And if 80 levels are held and the overall momentum is good, because the overall industry in which it is operating in, that's a positive sign. So a recovery can be expected. But then the kind of momentum which we are seeing right now in the markets can drag the prices lower.
Okay, all right. So we have another stock in focus, that is your Lupin. It is down about 0.4% in today's trade. The company also came out with its Q2 numbers, and they have reported a healthy set of Q2 numbers. We saw the net profit jump up by 74% year on year, while the revenue rose by 12% in Q2. Raja, the stock has been quite volatile, Lupin, after its September high. Can we expect certain breakout from these levels?
Yeah, Lupin came out with his results, but it doesn't seem to have got any positive results, but not any impact on the prices. And the pressure continues to build. So it clearly says that the prices had reached an overbought zone in the month of September, and the continuous sideways traction and the declines which are being seen, it can push further to the downside. So
Okay.
look for going short in Lupin rather than going long.
Okay, going short for Lupin instead of long. But let's straight dive into our query segment. We have the first query coming in from Naveen. He's asking the view on Canara Bank for the long term. Canara Bank, I mean, the stock has given very modest set of returns from the past 1 or even 6 months charts. Where do you see, what is the near-term hold, Raja, for Canara Bank?
So like I said, PSU banks are a much better bet, but then we got to understand that the markets are not supporting any bullish momentum. So once if there is a momentum from SBI, okay, then you will see some brief up move in Canara Bank. But then overall momentum seems to be on the downside. So I would not be a buyer in Canara Bank.
Okay, not a buyer in Canara Bank. Another viewer is asking his query on views on GSPL. Raja, past 6 months it has done well, but if you look at 1 month charts, it is not doing well. Of course, we had some bearish sentiment in the market as well. But what is the near-term hold for GSPL stock?
Yeah, GSPL overall the momentum is quite strong, and yes, there has been a brief decline here. But then if you are an investor and are willing to hold on, then your stop loss should be at 365.
Okay, 365 levels, that needs to be the stop loss. We have another query coming in from Krishna. He's asking the view on Patel Engineering. He's holding the shares, 1000 shares at 56 odd levels. So he's suggesting what is the near term. So right now it is trading about 50 odd levels, Raja. But past 6 months also it has not done well. Past 1 month also not done well. If you look at YTD charts also, the stock hasn't really done well. What can we expect in the near term? Should you book losses at this point of time?
Yeah, so when you take a look at the price action, it is indicating that yes, there are challenges right now, and it's advisable to book and exit and look at other sectors because that's the most advisable scenario. And with the number of sectors available also being limited, one has to be careful as we tread into the coming sessions.
All right. We have another query coming in from Rajendra Prasad. He's asking the views on Zomato. Well, Raja, Zomato came out with quite a blockbuster set of performance in the September quarter. We saw Blinkit as one of the most, higher revenue generator for Zomato. What can we expect for the near term? Can we expect what are the new targets for Zomato?
Yeah, Zomato definitely is doing well, and we can expect target towards the region of around 320 within the next few weeks. But looking at the market condition, like I mentioned earlier, it will definitely take some time for the overall momentum to persist and carry the prices forward.
Okay. All right, 300 odd levels, 320 levels that we can eye for Zomato. But shifting another query, Satya is asking his view on Emphasis from the 6 to 12 months point of view. Emphasis, Raja, it came out with its Q2 numbers as well. The profit rose little over 8% when we look at sequential basis. Revenue also grew by very modestly about 3.3% sequentially. So what is the near-term hold for Emphasis stock?
Yeah, Emphasis is showing potential for heading lower. So one should hold it with a stop of around 2770. If beneath that, then one should not persist with it because the trends can slip to the downside.
Okay, all right. We have another query coming in that is for your Aditya Birla Capital by Debu. He's asking what is the view on Aditya Birla Capital. Past 1 month the stock hasn't done well. Past 6 months also I can see the stock has languished in trade. So what can we expect? Can we expect a breakout from these levels for Aditya Birla Capital, Raja?
No, you can't expect a breakout here. Actually, there is going to be a breakdown. So, movement below 194 would trigger more downside. So, I would not be holding on to the stock right now. Or at least if I'm holding, my stop loss will be at 194.
All right, 194 stop loss that we need to eye out for. Let's take another stock in focus. That is your Ircon International. It came out with its dismal Q2 numbers. Ircon's profit fell about 17% year on year, while revenue also saw a fall of 18% year on year. Raja, Ircon as a stock, the stock has declined in the past 3 months. Do you expect the bearish trend to stay from here on?
Ircon, the entire railway theme has gone for a toss this year. Everyone expected a repeat, but nothing repeated except the declines. So there has been heavy declines in this stock. The theme is not working anymore. So one should not be expecting that this railway theme will again pick up and we'll see more upward traction. It's best to exit this at the moment.
Best to exit this at the moment for Incon International. Okay, we have another query coming in from Hemant. He's asking the view on Ujjivan Small Finance Banks. He's seeing 26% loss as he's averaging 4,500 shares at the rate of 50. So he's asking, please help me understanding in this chart. Ujjivan Small Finance Bank, past 6 months it hasn't performed well. Raja, what is the near-term hold for this small finance bank?
Yeah, see, the entire small finance banking space has not been able to conjure up enough momentum. And like we spoke at the start of the show, that since the start of the year, the momentum has not seen any traction here. Second, the banking space itself has not moved. So, considering all of this, expecting this stock to really rise against the tide would be a challenge. So, if you are having a position, then your stop loss would be below 35.
Okay, below 35. Like we talked about Tata Motors, let's move on to another stock in focus, which is another automaker, that is your M&M. It rolled out its Q2 performance, where we saw profit rising about by 35% year on year, led by strong SUV sales, while revenue also saw a 10% rise year on year. The management has upped its tractor guidance, and the SUV sales growth is also likely to stay in the high teens for the remainder of FY25. Raja, M&M as a stock, do you expect the upside to continue? Today it is up very moderate, 0.4% if you look at the charts.
See, M&M has definitely performed well over the last few trading sessions. And right now it has hit a roadblock. And I feel that at this current juncture, it would not be advisable to enter into M&M. So for those who are having a trading bet, this could be a good opportunity to go short.
Okay, good opportunity to go short. Let's take a look at how Trent is performing in today's trade, because it came out with its Q2 numbers yesterday. Yesterday it was one of the top Nifty 50 losers as well. Today also the stock is very moderately not doing that well. In Q2 the revenue rose by 39% year on year, while profit rose by 47% year on year. However, it missed the street estimates. Raja, can the current valuation supports the Q2 miss that it has come out with?
Yeah, so right now what's happening is that there is a valuation and perspective recalibration, so to say. So right now, the extent of run which Trent witnessed, the prices are now undergoing some recalibration, and the momentum could once again dip lower, is what I observe. And the levels which you could see is around closer towards 6,000.
Okay, 6,000 levels that we need to watch out for. But let's take another stock query. That is your Alex. He's asking the view on Triveni turbine mid to long term. Past 1 month, the stock is down 11%. Raja, so what is the near term hold for Triveni turbine?
So yeah, this stock did attempt on two occasions in August and in October, but it was not able to scale to a new high. And this constant sell-off that is emerging at higher levels clearly indicates that there could be more pressure to the downside. And the downside which one can expect is to the region of around 600, and that will once again put it in a good situation to get into on the long side. So one should look to buy at around 600 levels.
Okay, 600 levels. Another query coming in is on Anue. He's asking the view on Sterling and Wilson. He's holding at 23% loss. So should he exit or hold at this point of time? If you look at 1 month charts, it has given 6% returns, a bit of firming up after 6 months of 22% loss. So what do you expect? How does the stock look like, Raja?
Yeah, the stock has definitely hit support, but the possibility of a range bound action is very much on the cards. So one can hold on with a stop at 544.
Out. But Raja, before we let you go, just a quick take on your trading picks at this point of time.
Yeah. So if I have to put on a trade, one trade would be on SBI, because the setup is quite encouraging, and the risk to reward ratio is also quite good. So as a trading bet, one could buy it at current levels, have a stop at 851 and a target of 875. And the other stock would be from the pharma space, which is witnessing some sell-off. So the sell would be on Zydus Life at around 979 with a stop at 991 for a drop to 950. So these are the two trading bets from my side.
Okay, SBI and Zydus Life. But Raja, thank you so much. Thank you for giving out your time and answering all the stock related queries. We hope that we connect with you soon as well.
Yeah. Thank you. Bye.
Okay. All right, let's take of the markets before we go on to our next guest of the show. Sensex down about flat in the red. Nifty also flat in the red. Below that 24,200 mark. We started off the day with 24 above that 24,200 odd levels, but now we are down some points from 24,200 levels as well. If you look at some of the sectors, Nifty IT, once again, it is holding strong in this market, up about 0.8%. Other than that, Nifty Metal and Nifty Pharma Index, that also is doing well. Nifty Metal Index, that started the day on a red, but now it has seen a little bit of a buying, and it is up about 0.6%. Other than that, we can see Nifty Auto, Nifty Bank, all of them not doing well. India Wix, that has also spiked up. It is given about like 1%. It's started off with 2% up move, but right now it's just moderated and it's up about 1%. Broader markets, they're seeing a cut. Of course, they're down mid cap and small cap indices. They're down about 0.1%. But let's quickly get on board with the fundamental guest on the show. We have market expert Aishvarya Dadheech of Fident Asset Management. Aishwarya, good morning. So good to have you on the show.
Good morning to all the viewers.
Aishwarya, the Fed has cut interest rates by another 25 basis points. And the Powell has also indicated that he has not ruled out the possibility of a December rate cut as well. But the RBI, they have hinted that the inflation in October could exceed. So when do you expect the RBI to embark on the rate cut path?
I believe obviously we are out of these two big events. One was the Trump election outcome, US election outcome, where Trump came out with a victorious feat. And obviously we saw yesterday about the US Fed outcome. I believe the whole equation has changed now with regard to how things will play out for the global economy and the global market going ahead. Obviously, Fed went ahead and did 25 bips cut yesterday, but the next move, which is in December, I believe they will watch out any change in the policy which possibly this new administration bring into, and the fear about rise in your 10-year yield, the rise because of the fiscal deficit expansion, the clarity about cut has definitely taken a backseat after this regime is what I'm trying to indicate here. Now, it's very interesting to see historically when Trump came last time in 2017, that time both CPI inflation as well as your 10-year yield was close to 2%. Now, when he enters his regime this time, it is hovering around 4.25 CPI and almost 4.3 of US 10-year yield. And on top of it, if you look at last time when the US deficit and the US debt as a percent of GDP, US deficit was close to 3%. Today, it is almost close to minus 6.5%. And when I look at GDP, which is US debt as a percent of GDP was almost 103. It is almost close to kissing around 120. So it will be very important to watch because I believe the maneuverability with Trump to play around with expansions is limited. And the whole thesis about fear in the market, I believe it is more than warranted. So possibly they will take a middle way somewhere around, and even Fed on top of it will look out how the changes will happen. And that's why they have taken out the inflation comfort tagline from their statement yesterday. So I believe there would be like there was 90% probability of another cut in December. It has gone down to 50, 60 as we speak. And when we see more data coming ahead, I believe we will have more clarity. Coming back home, RBI definitely will try to be in a wait and a watch mode. They will try to see how things will move ahead with regard to regulation, with regard to tariff, because we have already seen that dollar index has strengthened. We are seeing that yield is hardened over there. So there will always be a risk of, imported inflation in the country. And we are already seeing, if you see a CPI inflation, is a 7-8 month high. So I believe RBI will still remain in the wait and watch mode. And we definitely rule out any cut by RBI in this calendar year at least. Whatever will happen, possibly will happen in the early part of the next calendar year, and that too, it will remain very shallow, is what we believe.
Okay, all right. So a delayed rate cut is possible from the RBI. But, Aishwarya, what could be the next catalyst for the markets? Because we are done with the US presidential elections. We are done waiting for the FOMC outcome as well. But nothing really created a trigger and an up move in the market. So what could be the next catalyst that we can be looking out for?
Obviously, we have, as I said, we are out of these two big events, right? And we are in the middle of this quarterly season, which has not all that great, right? If you look at the trend that we have picked up, in this market. The trend that we have picked up in this quarterly season has not been great, right? Apart from banking and to an extent, uh, I think there's some disturbance there. Yeah, apart from banking, there's some sectors here, there, metals, cements, construction materials have all seen a very muted set of numbers. And on top of it, on account of all of this, we actually seen cut in Nifty earnings. So if you really see the month of October when Nifty has gone down 6%, right? It has been accentuated because of FI selling, no doubt about it. But a large part of it is also to do with the cut in the earning estimates of EPS of Nifty. So both for FY25 and FY26, we are in for the broader part, the FY26 EPS cut is close to 6 to 8% after the number that we have witnessed so far. And market has more or less mirrored that, cut in the EPS through the price depreciation of 6% there. Second most important thing, as you talked about the events, I believe the closely watched event will be the FI's outcomes because we saw almost the highest number of flows happened in the month of October, close to it. The secondary selling was to the tune of almost 11.5 or little more than that $1 billion. And I believe the trend is continuing in the month of November so far. So I think the only thing which people will like to see what the trend change happens, especially after the Trump outcome of election. And at Fident, we reasonably believe that this trend of FI selling will continue because all of a sudden US is looking more attractive because of the all excitement about the taxation cuts and the expansionary mode that they will take. I believe a lot of money will start moving back to US. And we have seen that dollar has appreciated. We have seen the yield has hardened. It doesn't bode very well for the emerging markets. So, and on top of it, we are seeing that China is spending its balance sheet. Possibly they will announce little close to $1.7 trillion of I would say support to the whole economy. Then it will become more difficult for India, given that more of the passive outflows will happen out of India. So possibly the FI flow is just was not for a month. We believe it will continue, and market will try to take cues that whether this can turn around, which to us looks very unlikely as of now. Even that, I think the magnitude will definitely go down, but the trend is not reversing, at least for this calendar. So we will have to stay with that. And apart from that, there are no big positive expectation as you're expecting on markets. They are more to do with any other geopolitical risk if that picks up or if the inflation data deteriorates further from here, and that will be which will be impacting the market adversely. So we are in a tough time, if I may say so. For that, so the next 1 month, things are not looking all that rosy.
Okay, Aishwarya. Aishwarya, I just have a two-part question here that you mentioned about. We will be seeing aggressive outflows because US markets have turned attractive. So how much of a correction do you expect for the Indian markets to occur at this point? And the second is that when do you expect the FIIs to make a comeback to India?
So I think that's a great question. And we're doing some study on FI flows and its impact on the market. And what came out very interestingly is that when you look at the last 20 years of data of when the FI appreciation led, FI buying led appreciation and FI selling led appreciation when happens, the correlation coefficient is very high on the month when it happens. So the correlation coefficient was almost 0.58 for the month when the FIs either buy India or when they sell India. The kind of impact that they have on the market is higher. But when we do that study for the next 1 month, next 3 months, next 6 months, and the next 1 year, the correlation coefficient falls sharply to close to 0.5 bips or 0.8 bips. So this data tells very clearly that FI is not ruling the Indian market. And historically, the case was 15 years back, 20 years back, the trend was there. But right now, the last 5, 10 years, or even in this calendar year, obviously when they sell, there will be an impact. But it doesn't say much about the forthcoming market movement in the coming month or so. The correlation coefficient is very, very small. And second, when you determine the coefficient of determination, that is the R square. I don't want to sound very pedantic here, but this is a very, very important data. It clearly says that the R square ratio of FI selling and the market performance is almost 30%, 0.3, which basically says that even in a month when market CFI is a lot of selling which has happened, say in the month of October, when market went down 6%, Nifty, the 30% was on account of FI selling. 70% was on account of other reasons. And for us, this time the reason was the cut in the earnings because of a very big set of numbers by quarter, quarter two numbers that we have seen. So to summarize what I'm trying to tell you here is that FI is not taking the shots in the market. The trend of FI selling, more or less, as I said, will continue. But DI buying, the way most of these large institutions are sitting up on cash, markets froth has been taken care of. Majority of the indices have gone down between 5 to 8%, apart from the micro cap. Major of the stocks has gone down between 20 to 40%. So that value proposition is coming back into the system. And with the intensity of domestic, the financialization of saving and the domesticization of stock market by the investors will continue. We believe that this trend will get within weakened over the next couple of months. In spite of FI selling, we will not see much impact on the market is what I'm trying to tell you. So that is what we believe at Fident Asset.
Okay, okay. 70% you mentioned that was because of other reasons and because of a dismal second quarter performance as well. But, how does the upcoming quarters look like for the India Inc.?
Obviously, we are almost out. I believe this is one of the weakest quarter that we have witnessed in many, at least 2 to 3 years, if I look at this data. And I can tell you, this is a very mixed trend, where we have seen, as I said, the construction materials and FMCGs and automobiles have done really bad on performances. But if I look at businesses with a more rural focus, if I look at BFSI, if I look at IT, if I look at some pharma names, have done relatively well. Even if you look at the numbers of, Trent yesterday, or possibly Page Industries or Indian Hotels, which reported the numbers, it tells you a very, very different story that all that is not broken yet, So that is what it is. So obviously, I believe that the expectations of double-digit growth, which we witnessed for the last 4 years, has taken a beating. But given the revival in rural side, the revival in deposit led in the financial system, things are not all that bad, as I'm trying to tell you. So we might not do 14-15%. We will still be happy with 10 to 11% growth on EPS for at least for the next 1.5 years for the market. And since the valuation have taken de-rating from that perspective, things are looking on risk reward perspective, I would say optimistically attractive, if I may use that word. But some revival on ITSS space, given after the after the Trump outcome of election, because it has a higher BTC and Nifty can play around fine. BFSI continue to do well, which is almost like 40% of the Nifty back, should help earning growth over the next, say, 2 to 3 quarters. But we don't expect any sharp recovery, at least for the next 2 years. So 8, 9%, 10% year-on growth is what one should be happy at this juncture.
Okay. Aishwarya, we saw a dismal Q2, but majority of the experts, they have said that the financials are their favorite bet. So does it stand the same for yours as well?
So if financials is one area where the risk reward is most favorable, right? And when we look at the numbers this quarter, I think this is one sector which is actually holding up the indices return or the market EPS growth per se, right? And both private as well as PSU, so far SBI is yet to report, but majority of the other PSU have reported very decent set of numbers. Second most important thing which was lacking in the financial space was a slightly lesser growth of deposit. And I think first time we have seen that deposit growth has actually outpaced credit growth. So, stability is coming back into the system. So I would say BFSI is more or less is a hiding space for the next 3 to 6 months when we are not seeing too much happening in other sectors per se. Second, the biggest concern on credit cost and asset quality has not really been an issue, apart from MFI and some unsecured personal loan segment. So we can obviously avoid those kind of BFSI or NBFCSS space. But large private banks, PSU banks, I believe they provide a lot of comfort from value propositions. I think private banks are trading at almost 2.2, 2.3 times price to book 1 year forward, which is almost like 10% lower than the long-term average. and that holds also for NBFCs. One have to be selective with NBFCs. Obviously, if you see gold loan, because of the gold prices, we are seeing very strong growth. But MFIs and possibly some of the vehicle finance to be ignored. MGIs, housing finance, those are the areas which we believe will continue to grow well going ahead. Uh, Private banks, I believe, is an area which will be where we will see massive buying for institutions in the coming times. Now, obviously, there is some concern on NIM contraction because most of these private banks are trying to go and garner deposit at a higher cost of funds, which will possibly have a pressure on spread and on NIM eventually. And on the time, if you see an interest rate cut by RBI, that will possibly will further put pressure. But that way, any banks which has a very strong liability asset franchise will be able to manage it fast. And second thing is to look at the credit cost. So probably business banks which has a more standard procedure, stronger procedures on asset liability management as well as the crediting underwriting practices should be the part of the portfolio. So we at Fident are very optimistic on private banks, and we are overweight majority on BFSI and ITS as we speak.
Okay, all right, Aishwarya. Aishwarya, just one last question before we let you go. But what are the other themes that you like apart from financials? We've had a Q2, subdued Q2 performance. But where do you find that those undervalued themes are there, and there is a little bit of a conviction in earnings as well?
Apart from private banks where we believe there is value proposition in favor, other things which we like are basically platform plays. We like exchanges, we like RTA agents, we like more of this financial platform plays. But if I look at from value propositions, majority of them are, I would believe, not very comfortable on valuations. They are trading between 40-45 times price to earning, but the growth part is very, very strong. So, those propositions, on exchanges or RT agents is what can see a much higher growth there. But the risk reward in the BFSI space is only favorable for banks. For NBFCs, only segment which we like is housing finance. I believe that is where you can see majority of the players are trading in the range of 2.5 times, 2.7 times price to book, where the growth is in upward of 15-20%. That segment is where when investors can go and allocate money, apart from the private banks over there. Second, last but most important point is that we believe this trend will continue for the next 6 to 8 months, 9 months, when we see other sectors not catching up. So when say chemicals sectors start catching up, or say IT sectors start catching up, a lot of the smart money will start moving from BFSI to players like segment like this. So that will possibly the play we will try to do in coming times. But right now, because of this visibility on the market is tough, I believe capital should be deployed in BFSI per se to protect capital as well as have a healthy growth, which is the only sector which we are witnessing the growth so far.
Okay, BFSI, chemical, some of the players that you're watching out for. But all right, Aishwarya, with that we have to let you go. Thank you so much for your time. We hope that we connect with you soon as well.
Thank you. Thank you so much.
Okay. All right, let's take a quick check of the markets. Sensex and Nifty, both of them have recovered from their day's lows. Sensex is up about 100 points, while Nifty is up about 46 points, still flat in the green, but still above that 24,200 mark. Nifty IT index, that is the standout performer of today, doing well in today's trading session. We can see the top gainers in the technology names continue to be TCS, Infosys, HCL Tech, Wipro and LTI Mindtree. Apart from that, broader markets, that has seen a bit of a recovery. Mid-cap indices in flat in the green, but small-cap indices still not doing well. Top gainers dominate the top technology names. Apart from that, top losers continue to be Trent, down about 2% in today's trading session. Despite a stronger Q2, it still is disappointed that it was not in line with the street estimates as well. BPCL, Coal India, Shriram Finance, Tata Motors, all of them not doing well in today's trade. But we'll see how it pans out. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market has developed, what the stocks are in focus. Until then, signing off, stay tuned to moneycontrol.com for all the news updates and market insights.